Hello everyone, welcome to the market opening bell for Thursday, May 8th. During Chinese Vice Premier He Lifeng's visit to Switzerland, he will meet with US Treasury Secretary Percent. The People's Bank of China has introduced 10 measures to stabilize the economy, boosting Hong Kong stocks to open sharply higher on Wednesday. The Hang Seng Index opened 507 points higher, peaking at 534 points, up at 23,197, but later moderated, closing up 29 points or 0.1% at 22,691. The A-share index fell 19 points or 0.2% to 8,242, while the Hong Kong Hang Seng Tech Index dropped 39 points or 0.8% to 5,200. Total market turnover reached 240 billion Hong Kong dollars. Southbound funds net sold 78.66 billion Hong Kong dollars in Hong Kong stocks, with net buys China Construction Bank $668 million, Meituan $300 million, Sino $213 million. Net sales Tencent Holdings 2.783 billion Hong Kong dollars, Xiaomi $2.026 billion, Alibaba $955 million, SMIC $591 million, PopMart $259 million, Akasol $155 million Hong Kong dollars. Southbound funds have net bought Meituan for 8 consecutive days, totaling 8.735 billion Hong Kong dollars. Technical analysis, the Hang Seng Index briefly broke above the 50-day moving average at 22,799 and 23,000, but fell to hold, dropping over 500 points from the daily high of 23,197 to close at the day's low, forming a large bearish candle. With turnover rising to 240 billion Hong Kong dollars, selling pressure is significant, having rallied nearly 4,000 points from the April 9th low of 19,260, rebounding 70% of the prior decline. The index may have peaked short-term and could correct. Initial support is at 22,200, with further support at 21,700. Mainland Chinese markets also opened sharply higher but closed with narrower gains. The Shanghai Composite rose 28 points or 0.8% to 3,342, peaking at 3,356. The Shenzhen Component Index gained 22 points or 0.2% to 10,104, with a high of 10,248. Combined turnover for both markets was 1.4688 trillion yuan, up 132.7 billion yuan from the previous day. The yuan's central parity rate hit the 1-month high of 7.2005 against the dollar, up 3 pips. The PBOC rolled out multiple monetary policy measures, including rate cuts and reserve requirement reductions. From Thursday, May 15, the reserve requirement ratio will be cut by 0.5 percentage points, injecting approximately 1 trillion yuan in long-term liquidity. The reserve ratio for auto finance and financial leasing companies will be phased down from 5% to 0. The 7-day reverse repo rate will drop from 1.5% to 1.4% effective today. To enhance structural monetary policy tools, the PBOC will lower re-lending rates by 0.25 percentage points from May 7th. Post-adjustment rates for 3 months, 6 months, and 1 year agricultural small business re-lending are 1.2%, 1.4%, and 1.5% respectively. The pledged supplemental lending (PSL) rate is 2%, and specialized structural tools are at 1.5%. Additionally, personal housing provident fund loan rates will be cut by 0.25 percentage points, with first home loans about 5 years dropping from 2.85% to 2.6%, saving over 20 billion yuan annually in interest. Link REITs surged 6.7% to 39.95 Hong Kong dollars at the State Council press conference on financial policies to stabilize markets. CSRC Chairman Wu Qing highlighted deepening bond market openness and including REITs in Shanghai, Hong Kong, and Shenzhen Hong Kong Stock Connect. Hong Kong EX CEO Bonnie Chan noted in March that REITs and RMB stock trading counters would be included in Stock Connect this year. Shanghai Anti, debuting today, announced a 10% allotment ratio for one lot, 30 shares, at 113.12 Hong Kong dollars per share. In Philip grey market, it opened 23.8% higher at 140 Hong Kong dollars, hitting a high of $188 and a low of 140 Hong Kong dollars, and closed at $183.3, up 62% or $70.18 from the listing price. Turnover was 500,000 shares valued at 86.2 million Hong Kong dollars. Excluding fees, one lot of 30 shares yields a paper profit of 2,105.4 Hong Kong dollars. In the US, before the Federal Reserve announced it would keep interest rates unchanged, the Dow Jones Industrial Average rose as much as 405 points but saw significant losses after the announcement. However, following Fed Chair Jerome Powell's press conference where he noted that tariffs are expected to have a short-term impact on inflation and the economy remains robust, the Dow regained momentum, closing at 41,113, up 284 points or 0.7%. The Nasdaq closed at 17,738, up 48 points or 0.3%, and the S&P 500 closed at 5,631, up 24 points or 0.4%. The Golden Dragon Index, reflecting Chinese concept stocks, fell 168 points or 2.3% to 7,031. Alibaba dropped 3.5%. Apple previously announced plans to integrate AI search functions to its browser, a move that could challenge Google's dominance in search, causing Alphabet's stock to plummet 7.3%. Apple stock also fell 1.14%, making it the worst performing Dow component. Nvidia rose 3.1%, Tesla gained 0.3% with preliminary data from China's PCA showing Tesla's sold 58,459 China-made vehicles last month, down 6% year-on-year and over 25% month-on-month. Disney reported that driven by subscriber growth on its Disney Plus streaming platform, its second fiscal quarter turned a net profit of $3.28 billion with adjusted earnings per share of 1.45 US dollars, surpassing market expectations of $1.2. Revenue grew 7% to $23.62 billion US dollars, also beating estimates. The stock surged 10.8%, making it the top Dow gainer. Disney Plus added 1.4 million subscribers, reaching 126 million, above the expected 123 million. The direct-to-consumer business revenue rose 8% to $6.12 billion US dollars, while the experiences segment, including parks, cruises, resorts, and consumer products, grew 6% to $8.89 billion US dollars. Domestic theme park revenue increased 9% to $6.5 billion US dollars, while international theme park revenue fell 5% to $1.44 billion. Additionally, Disney announced plans to open its seventh theme park resort on Yas Island, Abu Dhabi, in the UAE. Our stock pick today is Tencent Music Entertainment, stock code 1698. Tencent Music achieved solid progress in 2024, with its online music business delivering strong performance, driving full-year revenue growth and expanding profit margins. Total revenue for 2024 reached 28.4 billion yuan, up 2.3% year-on-year. Online music subscription revenue grew 25.9% to 15.23 billion yuan, fueled by an increase in paying users and higher monthly average revenue per paying user, ARPPU. Net profit attributable to shareholders rose 35% to 6.64 billion yuan, while non-IFRS net profit attributable to shareholders increased 29.5% to 7.67 billion yuan. In Q4 2024, total revenue was 7.46 billion yuan, up 8.2%. Online music service revenue grew 16.1% to 5.83 billion yuan, driven by robust subscription revenue growth and advertising revenue. Net profit attributable to shareholders was 1.96 billion yuan, with non-IFRS net profit at 2.28 billion yuan. Gross margin improved from 38.3% in Q4 2023 to 43.6%, primarily due to strong growth in music subscription revenue, including super membership, advertising revenue, and increasing original content. The company continued to strengthen its platform's core value, driving growth in membership scale and ARPPU. Music consumption on in-car platforms increased, supported by expanded partnerships with mapping services like Gaode Maps and Baidu Maps, as well as deeper collaborations with electric vehicle makers like BYD and Xpeng. Enhanced user experience through better audio quality and K-song features also contributed. Super membership saw strong quarter-on-quarter growth, driven by superior audio quality, a richer digital album library, and exclusive perks for online concerts such as high-definition viewing modes for select performances. Looking to 2025, Tencent Music plans to leverage AI to enhance personalized services and deliver fresher music experiences. Confident in its 2025 outlook, the company announced an annual dividend of approximately 273 million US dollars and a new stock repurchase program of up to 1 billion US dollar. Recommendation buy price 55.5 Hong Kong dollars, target price $61, stop loss $52.5. I do not hold the above stock.